to this edition of IBFD Tax News and Views, bringing the week's tax news in a nutshell. I'm Ms. Medenijs, Tax Technical Coordinator at IBFD, and with me for a Beyond the News interview Stuart Gibson, IBFD's Chief Editor, Global News, Washington, D.C. On today's show, newly installed OECD Secretary General Matthias Cormann expresses optimism for reaching global consensus on taxing the digital economy. The US imposes, then suspends, retaliatory tariffs over digital service taxes, and the US state of Missouri is set to become the last US state to require remote sellers to collect and remit sales taxes under the landmark Wayfair decision. These and more, including Stuart Gibson's interview with Andrew Grossman, Majority Tax Counsel for the Ways and Means Committee of the United States House of Representatives, coming up on IBFD's Tax Takes. First, we turn to the top news of the past week as reported in IBFD's Tax News Service. Newly installed OECD Secretary General Matthias Cormann has expressed optimism about reaching global consensus on taxing the digital economy. Speaking during the handoff ceremony during his first day on the job, the Australian acknowledged that there is still work to do, but at the same time commended the Biden administration for its constructive engagement and the goodwill demonstrated at the OECD Council meeting. Cormann, the first OECD Secretary General from the Asia-Pacific region, took office on the 1st of June, succeeding Angel Gurria, who has served as an organization's leader for the past 15 years. Last December, the US Trade Representative determined that digital services taxes imposed by a number of the United States trading partners discriminate against US businesses. Last week, the US Trade Representative punched back against 6 of those countries, and then immediately pulled its punch. First, the trade rep imposed 25% retaliatory tariffs on certain goods imported from Austria, India, Italy, Spain, Turkey, and the UK. Then, the office immediately suspended those tariffs for 180 days, giving the 6 countries 6 months to reach an agreement on global tax reform that would roll back or eliminate those taxes. Missouri is set to become the last US state to take advantage of Supreme Court's landmark Wayfair decision, which allows states to require remote sellers to collect and remit sales taxes on goods sold within the state. Acting on the last day of its 2021 session, the state legislature passed and sent on to the governor a bill that, beginning in 2023, would require remote sellers with Missouri sales exceeding $500,000 to collect and remit sales taxes on goods sold or delivered into the state. Although earlier this year Missouri Governor Mike Parson identified Wayfair as a priority, his signature is still required for the bill to become law. The Argentine Federal Tax Authority established that suspension of revenue collection due to the pending lawsuits against various new tax measures does not apply to the one-to-only wealth tax. Thus, taxpayers who have filed lawsuits challenging the new levy were still required to pay the tax by April 16, earlier this year. But not all is lost for taxpayers who missed the deadline, as they may apply for a new installment plan up to September 2021 to pay off their taxes, interest, and late penalties. Governments are demonstrating an increasing appetite for the use of virtual currencies. Colorado's governor recently said that he would be thrilled for Colorado to be the first state to let taxpayers pay their taxes in a variety of cryptos, adding that allowing residents to pay state taxes with digital assets would enable Colorado to remain a center for blockchain innovation in the country and attract investments, good jobs, and innovators in infrastructure. The tax-savvy state is known for enacting forward-looking laws on digitalization. For example, since 2018, it is requiring state agencies to consider using blockchain to protect confidential state records from theft and manipulation. The Central Bank of South Africa is also considering making wider use of digital currencies. The bank is conducting a feasibility study into whether it should offer a digital currency that consumers may use for general retail purposes. Although virtual currencies offer a world of opportunities, They also come with a list of challenges, as the Australian Taxation Office recently acknowledged. In a just released update on its website, the ATO expressed concerns about taxpayers using the anonymity of crypto to evade their tax obligations. As a result, the tax authority will be reaching out to 100,000 Australian taxpayers with crypto assets to gently remind them of their tax obligations and urge them to review their tax returns. Nepal just unveiled its budget plans, which include major tax breaks to address the impact of the ongoing pandemic. The proposed budget would grant startups a tax holiday of up to 5 years, allow taxpayers up to a 90% deduction of their income taxes, and extend the loss carry-forward period to 10 years for some business sectors. In addition, Nepal will enact environmental protection measures to incentivize green vehicles and appliances, including abolishing excise taxes on electric vehicles and electric equipment. Normally, there can only be one winner of the UEFA Champions League, but this year, both finalists are winners. The Portuguese tax authorities proved that point when they granted a full tax exemption to all staff, players, and football clubs on the income derived from the 2020-2021 Champions League final played in Portugal. In case you missed it, Chelsea won the cup. And finally, the OECD just gained a new member, as Costa Rica has become the fourth Latin America country to join the world body. And it only took 6 years. And now we go beyond the news for Stuart Gibson's interview with Andrew Grossman. Stuart?
Thank you, Esme, for your informative news report. I'm Stuart Gibson, Chief Editor of Global News here at IBFD. Joining me today is Andrew Grossman, Chief Tax Counsel for the Ways and Means Committee of the U.S. House of Representatives. Welcome, Andrew.
Thanks for having me.
Great to have you. Great to see you. When we first scheduled this interview for today, which was about a month and a half ago, President Biden had just released his American Jobs Plan, which called for investing more than $2 trillion in U.S. infrastructure, paid for in part by raising the corporate tax rate to 28%, making other changes to the tax code. Speaker Pelosi had announced her intention to bring the package for a vote in the House of Representatives before the 4th of July. We thought we'd certainly have some legislation to talk about today, but so much has happened since then. In an effort to secure a bipartisan compromise, President Biden has reportedly offered to scrap the 28% corporate tax rate in exchange for a 15% minimum tax, and set today, June 7, as a deadline to reach bipartisan agreement on the broad outline of a package. So, Andrew, where do things stand right now?
Well, great question. I think as your question pretty much suggests, the president and the Senate have been fairly bogged down in negotiations in terms of trying to reach a bipartisan compromise. There's a clear preference on the part of the president and on the part of a number of senators, and I should just say members of the House too. This is, I work for the House, so I shouldn't really speak for the Senate. But just to say it, to try to reach some sort of bipartisan agreement on infrastructure as a first step. Obviously, as has been fairly widely reported in the media, the president's proposals to roll back the some of the larger provisions in the Tax Cuts and Jobs Act has been called a red line by many of the Republicans, and I believe the offer that you described at the 15% minimum tax was President Biden's attempt to circumvent that red line, essentially, by saying, okay, we'll meet you. I understand that we're gonna be at loggerheads if we keep on talking about increasing the corporate rate. But at the very least, why don't we look at those corporations that are paying nothing in income tax, and let's agree to impose some sort of minimum tax on those corporations. Now, it's not clear to me if the minimum tax he had proposed when he was talking to Senator Capito was the minimum tax that was proposed in the administration's budget, or if he had something else in mind, for instance, some sort of revival of the corporate AMT or what have you. But he's clearly the administration is clearly trying to think creatively and expand the horizons a bit in order to get the parties to yes.
So that kind of segues nicely into my next question. So the president, and as you pointed out, most of the actions going on in the Senate, the Democrats have invested substantial time and effort, and reportedly more than 500 meetings and phone calls just by President Biden, trying to craft this bipartisan deal that would enable a bill to pass with support from both parties. So what happens if they can't cut a deal, if they can't reach an agreement?
Well, if they can't reach an agreement on a bipartisan basis, I suppose if you talk to many members of Congress, their answer would be, that's the point where the Democrats should go it alone, so to speak, which is to say, use the arcane, or at least arcane to people who don't work in Congress, budget reconciliation process, which is a process by which a bill can pass with a bare majority in the Senate rather than a 60 vote majority. Now it's not clear yet that the Democrats have the full-throated support of everyone in their caucus to take that approach, which is to say the go it on their own without any support from Republicans. And if it's clear that a compromise can't be reached, that's going to be a serious discussion that the Democratic caucus is going to need to have with itself to see if there's a path forward using that budget reconciliation tool. This was the tool that the Republicans used, for instance, to pass the TCJA back at the end of 2017. It of course comes with a host of restrictions and strings on it, in terms of the rules that the parliamentarian has to enforce. In terms of what is allowed, all the provisions need to have revenue effect. So a lot of provisions that you would ideally like to see in a bipartisan bill, that relate to regulation, for instance, that doesn't necessarily affect revenue one way or the other, wouldn't necessarily be allowed in a reconciliation bill. So Congress definitely ties its hands a bit when it uses that mechanism, but it does give you the advantage of requiring only a bare majority in the Senate rather than a 60 vote majority.
So, and that's, by the way, the same process that they used to pass the COVID relief plan earlier this year under President Biden. So if they go the reconciliation route and the Dems in the Senate can get all 50 members of their caucus on board, which, as you pointed out, is not 100% certain today, what does the timetable look like? I know that there's going to be some action in the House tomorrow in one of the committees on an infrastructure bill. So what does the process look like? Will Congress still be able to meet President Biden's goal to sign a bill this summer?
Well, yeah, it's a great question. The process, once the decision is made to use the budget reconciliation process, what that essentially means is that the budget committee needs to set out its budget resolution, and the budget resolution needs to be the same in both the House and the Senate, and it needs to both decide on if and to what extent the budget will either raise revenue, lose revenue over the course of the budget period being 10 years. And so there needs to be a decision needs to be made on whether or not a portion of this bill, whatever the bill is, will be deficit financed. And additionally, the budget committee needs to then sort of divvy up the amount of the spending by committee. So there are the budget resolution is anything but a pro forma process. In fact, the really, really major political decisions are really all going to be contained in that budget resolution. And so while I never want to doubt what Speaker Pelosi says, because she proves me wrong time and time again. July 4th is coming up pretty soon, and just to say it, there really are a lot of political decisions that would need to be made between now and then in order to not only just get that budget resolution passed in both chambers, but then also mark up the underlying legislation that is intended to enact those recommendations, and then pass them out of the House. So I never say never, but it does seem like July 4th is awfully quick at this point. Suffice it to say, there are going to have to be a lot of very serious conversations. If in fact the budget reconciliation is the route they choose to take, the caucus is going to have to reckon with a lot of very serious political decisions in rolling out that budget resolution. Before the committees really start rolling up their sleeves and marking up their portions of the bill.
So my recollection, Andrew, is it was about 45 days that it took for the entire process start to finish for the COVID legislation that was passed earlier this year. That's kind of like streamlined if it were to go 45 days.
Oh, the COVID legislation was really one of the fastest bills that could have happened almost. It had the advantage of being largely written beforehand. The incoming Biden administration took a lot of cues from what the House had already produced in its own legislation, and so there was that kind of preformed interchange of ideas that really smoothed that process. And once the incoming president at the time, President Biden, set the number at 1.9 trillion for the bill, then it was the landscape was pretty clear in terms of what was potentially in the bill based on the HEROES Act that the House had passed last year, and it definitely made a much smoother process. I can imagine that given all of the many priorities from the Democratic caucus that are going to be angling to get into a reconciliation bill this time around, it might be more difficult, notwithstanding the fact that the president has submitted a budget to Congress. And the president's budget is certainly something that carries a lot of weight with the members in terms of thinking about what it is they would want to include in that relief package. But it's not a definitive document. And I think the president has said that himself. This is part of an ongoing discussion with the legislative branch in terms of what the American Jobs Plan should look like.
So given that summer actually goes till about the 20th of September, there is still hope that we could have a bill this summer.
Oh, yes. If we're talking about the official definition of summer, then yes, I'd say that there's definitely hope that we could have a bill.
I mean, meteorological summer is the end of August, but still, okay. So that's hope springs eternal. I couldn't let you go without commenting on the events of last weekend. The G7 finance ministers, as you know, including our own Secretary Yellen, met in London. They announced an agreement to set a global minimum tax rate of 15%, work toward reaching agreement on the remaining elements of global tax reform. Next month, it's expected the G20 finance ministers will announce a broad agreement to reform the global tax system. And obviously, Congress is going to have to weigh in on this. They'll likely have to pass some legislation. I see recently Senator Crapo, for example, of Idaho, asked some questions of the Secretary of the Treasury about what the proposals actually look like. So given what we already know, is it too soon for Congress to start thinking about what that legislation might look like?
Well, I don't think it's too soon. Certainly, I wouldn't be doing my job if I wasn't thinking to some degree what that legislation should be looking like. I will say, members are definitely talking about this and are interested in this. The chairman put out a statement. We're very excited to see more details. For instance, and members are talking about details such as for instance, the administration has proposed repealing QBI, but Pillar 2. The previous discussions have had some sort of substance-based carve out, and these are discussions that our members are going to be sort of continually interested in as the dynamics shift in terms of the not only just the overall minimum rate, but what the other parameters of the minimum tax look like they're being established among the G20 and the like. So it will be interesting to see sort of how quickly they develop as we're developing our legislation here. I imagine it will be something of a simultaneous process, and it's something that our members are now very attuned to. It got a lot of media attention over the weekend, obviously, and it could serve to be a really important implement in making sure that we have a level playing field on the international tax space.
It sounds to me like there is some alignment with both parties in terms of the end goal, which is to make the system more fair, to not discriminate against American businesses, and to make sure that tax havens are less and less available to companies to park earnings that should be taxed someplace.
I think that's certainly a fair. I don't want to speak for the Republican Party, but I think that certainly is a fair description of where the Democratic caucus is headed.
Okay. Our guest today has been Andrew Grossman, Chief Tax Counsel for the Ways and Means Committee of the U.S. House of Representatives. I want to thank you so much, Andrew, for sharing your insights into these very fast-moving developments.
Thank you so much for having me. It was great.
Before I wrap up, just a brief announcement. Like many of you, Tax Takes will be going on a holiday for a bit, but not to worry. We hope to return in a few weeks with more tax news and thoughtful interviews. In the meantime, that wraps up this week's edition of Tax Takes News and Views, the week's tax news in a nutshell. From Esme Denice and myself, thank you for watching. Here's hoping your week is not too taxing.